Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to briefly just go over the US dollar ahead of the FOMC rate statement later this evening. Basically, we've had some GDP data released that was better than forecast. We've seen a drop to 1.9%. This is what's giving the dollar a little bit of a bid at the moment because forecasts were suggesting that we were going to see a drop to 1.7%, but price hasn't dropped as much as what was anticipated. So what we're seeing is a little bit of a boost to the US dollar. Now, what do we expect ahead of the FOMC rate statement? Now, actually, the Fed are likely to cut rates. It's pretty much priced in that the Fed are going to cut rates from 2% to 1.75%, so a 0.25% cut. This isn't anything that's big news to the market because the Fed were talking about this in their previous meeting, that they were going to continue on the path of easing. Now, what we need to really focus on is what the Fed are going to say next. So in the FOMC statement, the language that they use, are they going to be slightly more dovish on the economy? Are they going to continue to talk about further easing? Now, if they do talk about further easing, I expect dollar weakness to continue, okay? So in that case, I'm not expecting a huge drop out of the meeting. What I'm looking for is what key areas we can look at for potential dollar weakness to come back into play. Okay, so one of the areas of interest for me is on this weekly time frame. We had that nice breakout of this nice supporting trend line of this overall wedge pattern that we've discussed before. Now the market's pulled back up, so I'm expecting a potential retest of this trend line support as resistance. Okay, so the market broke out of it. I want to see the market actually rally into this area here before seeing the move down. Now that's just personal preference. That's what I want to see out of the US dollar index. It might not happen, but that's what we're looking for. Another thing that we can look for, because price has already tested these previous breakout lows in here, we could actually anticipate further downside from current sort of prices. So if the market rallies back up into 90 into these current sort of swing highs that we're seeing there and rejects it, we could then actually anticipate the market to fall from here, breaking through this short-term trend line support and then look for further downside from here. Now, what I will say is wait for the dust to settle from the meeting. So what we want to see is the news announcement. We want to see the FOMC statement come out. We want to see the reaction of the market first. Give it an hour or so to calm down, and then let the dust settle, and then actively look for potential positioning depending on what comes out of the meeting. Obviously, the FOMC statement could say pretty much anything. They might turn around and say that they're not going to continue to ease because they feel like they've eased enough, which then could spark the market to actually rally off the back of that. Now, one thing that's I'm keeping in the back of my mind is the seasonality, and seasonality reports pre-election year is actually showing us that the dollar index falls typically through October, November and December. You've seen that in October already. We've had a nice fall in price, so I'm expecting that to follow through, but it's just, again, identifying those key areas that you could see that happening from. That's why we blend the fundamental analysis in with the technical analysis. Okay, so thanks for joining me for this brief update ahead of the Federal Reserve interest rate decision. If you like this video, please like and subscribe to the YouTube channel. Big thank you for passing 1,000 subscribers as well. Appreciate all the support. And if you want to see anything in particular, any kind of charts covered, please drop a comment below and I'll cover them at some point. Thanks for watching. I'll speak to you soon.